Very good. Hey, thanks for joining. So this is about SPX trading. So before you do the SPX trading, we just need to know what is the spread. If you don't know what is spread is the price difference between the combination of a short and a long leg. I'll tell you that one. So there are two kinds of spread. One is credit spread and one is debit spread. So if you see the spread here, so this is the example of a credit spread. The credit spread is one is long, one is short, and one is long. So when you say buy, it's a long. When you say sell, it's a short. Okay? So if you see here in the SPX, I have short 4100 and buying 4105. So if you see the price difference, the strike difference is how much? 5, right?
5.
Yeah. So 1 minute. So strike difference is 5, but down the what is the spread difference? The spread is if you see here, whenever you do the credit spread, automatically it's a credit, but the spread is here. So if you say 6.9 beat, 7.10 ask. Here 5.40 is a beat and 5.50 is the ask. Now E-Trade, this is the E-Trade screen. E-Trade is doing a bargain. So if you see the beat and ask, okay, so this is a difference. 7.1 minus 5.5, it will be this one. Then 6.95, 5.4, it will be this one. But it is doing a bargain thing. So this is the mid price. So basically, this is the best price you can get it. Okay. But when you sell in the market or buy in the market, you will get this price. But if when you say limit, then you get this price. Okay. This mid price. So the bargain it. So this is the spread. But if you just buy this one, you would buy at a 5.5. But if you are selling this one, you get 6.9. That will be one leg. But when you combine together, this is the difference. This is called spread. So combination of short leg and long leg. Okay. So short is when you say sell or red color, buy is long when it's a green color. So that's the spread. So here the credit means I'm receiving the money. You collect the trade first, like you collect the money from the trade. So if I'm crediting it, that means I'm collecting 1.55. I'll tell you the risk later on, but that is the credit. But when it's a debit, okay, you can also toggle it. Like you say buy lower 4100 and sell higher. That is higher strike 4105. So in this case, this is a debit. Automatically it will identify debit. And you are paying 1.7. And when you pay, that is going from your account. That means your maximum loss in this case is 1.7. If this one goes down, goes 0 or something, you still don't lose more, only you lose 1.7. But in this case, your risk is you are getting 1.55, but what is your risk? Because the 5 minus the credit you receive, because the strike difference is 5. Your maximum loss in this case is 3.45. What is the difference? 5 minus this one. Okay. So this is the credit spread and this is the debit spread. So mostly we will be doing the credit spread, not the debit spreads. So if you are new to spread, you can watch some videos, YouTube videos and stuff that will clarify some doubt. But overall, you will see all these things. Okay. And E-Trade is best for all these graphics and easy drag and drop and select and automatic price selection and everything is automatic by the E-Trade. I also like TOS for that one. Now, if we go to the next slide. Okay. So now we are discussing about the iron condor. Iron condor sometimes we call as IC. And in the IC, you have combination of put spread as well as a call spread. In previous slides, I showed you the credit spread. So this is a credit spread. So I'm selling the put and buying the put, selling higher put, buying the lower put. Similarly, selling lower contract, lower call, and buying the higher call. This combination automatically identifies an iron condor. Okay, so this is a condor situation. In the condor, you have 4 legs: 1, 2, 3, 4, and one is put credit spread, one is call credit spread. That together makes the situation condor, and it should have the same contract. Okay, each leg should have the same contract, and now it is providing in 0.9. So that means it was kind of a almost call has no value, only put has a value. Okay, so but you see that the credit is 0.75. But if you are opening this trade, in this case, tell me how much is your risk. So this is a $5 spread. So $5 strike difference, right? So 5 minus whatever the credit you receive. So in this case, your risk is too high because 4.25 is the risk. For 75 cents to get the $75, you are risking $425. Okay, that will be the same. So, but this is an example. Okay. Now, if you see here the iron condor, how it will be looking like, this will be like this. Oh, sorry, I forgot to put the legs here. Now you can see here, yesterday's trade, we got 2.15 and it's a -1 means credit spread, minus means credit, and mark is 0.67. So we almost got $144 in the net gain, but we closed much higher, lower, 0.3. Okay. So if you receive 2.15, then much lower you want, when you receive, you'll be always choosing to close lower price than whatever you receive. So I received 2.15. If I give them the $1, then I get $1.15 as a profit. But if I give them $3, then I'm losing 85 cents or $85. In this case, if you see here, I received 2.15, but right now it is 0.7. So how much I'm getting here? $145, right? But if it goes lower, if it goes 0.1, then how much? I'm getting $210, which exactly we did in the things. We closed little 0.3 on this one. So this is your, in this case, when you receive 2.15, in this case, my risk was 2.85. So I didn't control this one. And I put little bit risk and the exact same thing, the strike rate difference minus the credit receipt. So example 1, if the strike is 5 and we receive 2.15, then your risk is 2.85 per contract, or 285 per the contract. But if you can make $215. Similarly, example 2, if you receive more higher credit like 4.1, then 5 minus 4.1, total 90 cent is your risk. Okay, or $90 is a risk per contract. And if you close in between of a 3.5 or $3, then that's your profit. But here risk is less, but reward might be less or more, something like that. Okay, trade timing, I was talking about. So SPX trades basically 15 minutes more than after the market close. So market closes at 4 o'clock. Then SPX trade up to 4:15. Okay, so you have 15 minutes window to take some trades. Okay. The reason why I do is because I use 1 DT. Means basically I enter it today and tomorrow I'll exit, and I don't fall under PDT, pattern day trading policies. And also I can decide my price, what price SPX is closing. Based on that one, I can take the trade. Why is this time? Because I want to see what price SPX is closing. Based on that, I can decide my strikes. Okay, and only 15 minutes is needed to take the trade. Okay, so that I posted. So generally I post exactly at 1 o'clock or just 1 minute before, and you have 15 minutes to take the trade. You just need 2 minutes to take the trade. Okay. Requirements, if you have these requirements, you are easy to you can easily take these trades. Need 5K in your trading account to start with. Must know how to trade iron condor at trade spread. I believe all of you know about this. And we are available from 4 to 4:15 p.m. Yes, to take trades. Must have a trading account with good brokers like TOS or E-Trade, because they're full-fledged brokers and they have a lot of easy options to do the spreads, group the spreads, and group the iron condor. So it's easily you can manage the legs. Okay, other accounts I'm not sure, but they might have it. But these are the two good brokerage firm I work with. And so when I post the trade in the trading channel, so basically you know that there is SPX trade alert channel, and when I post, it will be looking like this. Okay, so you have to take the strikes exactly as posted. At the end, it should say limit credit. Okay, if you are not seeing limit credit and you're not seeing the exact price I'm posting here, there is but it may be a different price, but you should say limit credit. Okay, if it says something else or it's like kind of higher, then something wrong you have done. Maybe you are choosing the wrong expiration dates or wrong strikes or wrong legs. Okay, so sometimes it happens because there are a lot of numbers there, so you have to be careful to match exactly. After you do 5 or 10 trades, it will be easier, but for till that time you have to be careful and select what exactly you're selecting. So as I said that if you have a 5,000, you can take one contract. If you have a 10,000, you can take two contracts. Or if you have a 15,000, you can start with three contracts. Okay, so that's why you can also make your profit maximize. Okay, that's you can follow, but whatever you follow with proper discipline. So when you close the IC, most of the time when you click on the here is the IC, right? Iron condor. You click on that one, it will ask you to close. When you close, it will show you the close. If the last word is close, if it is not telling close, then that means you are doing something wrong. If the close, that means you're closing the iron counter, and it will. And when you do a closing, that is a debit. Okay, when you close, that's a debit. When you open, that is a credit. So we always open with the credit and we close with the debit. So when you got a $200 and if you're paying just only 50 cents, that means you're keeping 150 into your account. Okay, the same thing. So we credited $210, but we are paying whatever you are paying here. Like suppose I want to pay 20 cents. That means I'm trying to keep almost $200 into my pocket. And other than that, you have something called uh, commissions. For one contract total, I'm paying 1.4 as a commission and fees. So 1.4 into 1.4, $2.8 for two and for like 4 into 2 because I opened, I also paid something, right? So 4 into 4, 8. So 8 contracts, I'm paying 1.2.8. So you can divide how much I'm paying, right? This is 35 cents per contract, by the way. So that is a little bit about the SPX. And if you have any questions, you have some questions, I can ask me, I can answer. Let me open and share this one as well. What do you see now in the screen? Sorry about that.
E-Trade, power E-Trade screen.
You are seeing E-Trade, right?
Yeah.
Okay. So E-Trade, I can also show you. See, today you opened this one, 1.6. You guys got it, right? So you can see how it is looking like. Okay. And I can group them. So if I go in the E-Trade, I can say group. Okay. And these are the facilities I have. So I can do a like and drag here and drag here. So this became put vertical. So if I save it, so what is going to show is a put vertical and call vertical. So they're together. Okay. So now put vertical is 0.45. I got it. And actually, this is not the one, the 4110. This is 1.15. So 1.15 on the call side and 0.45 in the put side. Okay. So we got 1.6 and our aim is to close below 1.6. Whatever you will get the profit. But suppose in this case, so what's happening is your short strike is what? 4050. In the top side, your short strike is 110. So it has to stay in between. That's called inside. So 4110 and 4050. Okay. So these are the two strikes you have to keep watching. So if the SPX should close within this range, 4110 and 4050. If it closes, definitely you will be in profit. But somehow if it goes and closes above one of your short strike, then you'll be ending up losing the whole, like 1.5 minus 1.6, that will be 3.4 into your, that will be total loss. And And when we do that one, and next day we'll have some maintenance trade. Okay. So that, but so far we are successful last 2-3 days, and this is working. And okay, I also got some personal trades in this account. I think this is a different account, not my account, but somebody's account. But yeah, I got a different trade, so that's a little bit higher risk, not high, lower risk. So I got a credit of 3.30. So, and this is also risk. In this case, how much is my risk here? 1.7 per contract. Similarly, I got also another iron contract, little different, and this is under testing right now. So once I'm thorough on this one, I'll start posting this one in the this actually basically these two are under kind of my testing strategy. Though I'm trading live, but it's kind of a testing. I'm not posting these two things in the group, but this one was a higher credit, like I told you, right? So I received 4.05 in this case. So in this case, my total risk is 95%, 95 per contract. Okay. So that means, but I'm expecting it should go down. Okay. So the way SPX is established, I'm expecting it will go down at least 20-25 points down tomorrow. If done, I don't have much, I cannot make much money from this one. I'll try to make only 60 cents out of it. 60 cents or 50 cents. I'll be fine. That's why I have larger contracts. Okay. So if you see here in the 10 contracts, I have 950. Okay. 950 is the risk. Okay. But if it goes, if I can close in the 60 cent, I'll make $600. So 90 cent risk for 60 cent profit. Okay. So you can try what is the risk and things value. But if it does, then I'll try again. Okay. But this will work. This has worked almost 90% of the time. This works. 1 or 2 times it doesn't work. I'll keep doing it again. Okay. So these are the 3 trades I took it. But the trade I posted, this is the one iron condor. This kind of a less risk right now. Okay, means less headache, easy to handle. Okay, and your 90% probability you'll be making the money in this one. This is the low risk trade. I mean, though little high risk, but very high probability you will win the condor. Okay. Any question I'm talking? So any questions you have on this one? I see you had some questions, right? You were asking something earlier.
Yeah, so this is helpful. Thank you. I mean, it was very clear what you explained. I was curious on how you decide the strike prices. I know, for example, like you said, that tomorrow you're expecting it to stay within like a 25-point range. So I don't know if that is something that you are planning to explain.
No, that is basically that is my
Analysis.
chart analysis and directional
Got it.
things. So that's why I put a lot of trades in based on that one. Okay.
Right.
Based on the chart analysis. But the basic idea of this one is how to take the trades and you understand how to close the trades. As you said that you also want to know how to what price you want to close, right? Basically, if I show you another thing like today's, right? So today what happened, like SPX was trading C 4090. Our strike was today 4120, right? In the iron condor.
I think 4110 and
No,
40.
no, the closing one, the one
Oh,
week.
today's closing. Okay, okay, yeah.
Yeah, so if you
4120. Yeah, yes.
if you see here, so 4120 and these are the 4120 and 4125. Okay,
Right.
so 4120 and 4125 because SPX was trading at 4090 is here. Call almost lost its value up by after 2 hours of opening. Okay, so there was no value in this call spread. Okay. But the put spread was really driving because the SPX was trading almost 4080, 4075, 40. Have you seen that, right?
Yes.
That is close to the, you see the short strike of the put, right?
Hmm.
That's why the put spread had a lot of value. So when stock moved from 4075 to 4090, 4080, 4090, that's why we were able to close it 0.3. But actually, the call had no value. Okay. So when call had no value, you don't have to close the call manually. Okay. At that time, you are going to focus on the put side, put spread.
I see.
Okay. And the put spread, either you can put 0.3, 0.3, but sometimes what happens is, means it's very rare. Okay. Market will go up. Suppose you are expecting down, but you have a call. Market will go up and immediately will push down. Okay. Or in the other way around also. Okay. In that case, sometimes you'll be thinking, okay, this has no value, but all of a sudden you'll see the value. Okay. Do you understand? So today was a directional. Okay. But sometimes it is non-directional. Like it will, suppose I'm expecting it will go down, but all of a sudden morning it goes up, then goes down. So and when it goes up, you think, okay, put is doing, at that time what I do is generally I close the put value manually. Then when call goes down, I close the call manually. Okay. But today was kind of a fully range bound. Okay. So in that case, you can close only one side. And you have any doubt, as long as you're in the group, I can answer your kind of tell you which one to close and what price to close. Basically, most of the time we try to close 0.2, 0.3 something, because I don't want to wait till till the closing time. So 0.1 or 0.05, that takes time, and sometimes it goes in your wrong way. So
right.
Yeah. Ketan, you have a question? Sorry. Tapang, Rajnish? Down the road, I'm going to take most of the higher credit ones more frequently. Right now, I'm posting only one contract trade. Okay, but down the road, by the time, I mean, slowly going to post a little bit more higher credit spread based on the trends. Okay, so that will be more profitable for you guys. So today was very profitable. I had almost 50 contracts on this one. Though on the iron condor we closed, right? And not only one account, it has multiple accounts.
So Ravi, the timing point of